Hello and good evening. I'm Sulhi Azman and she's Nadia Hassan. And company, before we go into company news today, Nadia just came in. Fitch, in a statement just now, affirms Malaysia's outlook at A- with a stable outlook for the country.
Shouldn't we just be happier that it's that at the moment? I think these ratings, they have blessings and a curse. But we'll have to see whether or not that changes in a few months.
Correct, yeah, okay. Let's have a look at the companies in news today. We have Hong Leong Bank Bhd closed down 0.61% or 8 cent lower at 13 ringgit and 8 cent. And Nadia, today, Hong Leong Group of Companies is controlled by Tan Sri Kwek Leng Chan released a slew of results for the operating companies.
Yeah, because all the families, of course, they tend to release at the same time. YTL does the same, by the way. They do tend to all release around the same time. So we are continuing our sort of look on banks because yesterday was Alliance. Today is Hong Leong Bank, closed about 0.61% lower at 13.08. It has been up about 10% since August last year. And it's trading at about 11 times earnings. So yeah, it's all of them. And if you're looking at particularly in Hong Leong Bank, I'm kind of not really surprised given how the earnings have been. Yes, top line is up, but when I say up, I say 1.2 billion from 1 billion. Net profit, however, down 37.6%.
Correct. And if you look at the, just before we go into the bank itself, the financial group, HLFG, the net profit was down by 38%, revenue was up by 2%, and Hong Leong Capital, which has been suspended from trading due to the fact that it was not able to meet the public shareholding requirement spread. Net profit was up by impressive 40%, but revenue was up by 13%. Now, let's have a look at the Hong Leong Bank results review today. Now, Hong Leong is a largely retail bank. Nadia, 62.5% of retail loans and 29.5% of retail deposits. If you look at the metrics today, gross loan impact ratio, which is essentially non-performing loans, is just at 0.86%. It's quite impressive for a bank.
Yeah, exactly. So the fact is, MITF actually issued a report on Hong Leong Bank, but that's quite a while ago. That's the beginning of the beginning of the month. They have a neutral call with adjusted target price of 14.60. I think they're not going to be immune from everything that all the banks have been seeing this year. I think the indications are already that it's going to be a tough year for banks. We mentioned yesterday at Alliance how HSBC, however, their earnings were just majorly disappointing. Europe has been hit by the same thing. I'm repeating myself again, mostly because I think this is going to be the story that's going to continue. And Hong Leong, it needs to find, it has its strengths going for it, but is it enough?
Yeah, correct. And if you look at the capital ratio, Hong Leong is actually one of the strongest ones because they actually raised the rights issue of capital. And if you look at the regional contribution, Cambodia business saw loan expansion grew by more than 50%. Now, the Chinese bank, in which it owns 20% stake in Bank of Chengdu, contributes around 12% of the group's profitability. Now, it seems to be doing well, but I think in the local market, as you said earlier, Nadia,
tough.
The stiff market, it's a stiff competition.
And let's not forget, they also indulged in something called an MSS, which is the mutual separation scheme. It cost them about 172 million, and it's not new. A lot of banks have been doing it. A lot of companies do.
Yeah, correct. So in the summary, the Hong Leong Group of Companies today, it released the second quarter and first half results today, and the bank saw net profit down by 38%. Now, with stiff competition in the local market, the owners will be on the new CEO's shoulder to drive the company forward. And let's have a look at the brokers call. Today, we have the interesting company, Malaysian Resources Corp Bhd. The research note was courtesy of Kenanga and CIMB Research. The stock closed at 1.65% or 2 cents lower at 1 ringgit and 19 cents.
So stock's actually been up about 55%. Of course, to its friends, we call it MRCB. And these guys announced their 4Q yesterday. Definitely out of the red into 26.8 million for the net profit. Down, though, however, on the top line. And that was, net profit more than doubled. It definitely is boosted by the Q Central development. Sales of like Platinum Central, you can hardly miss it. That area has just sort of burdened. But analysts don't seem to be quite impressed with the results. Kenanga has a market perform. They actually have a target price of 139. They actually kept it flat across the board. CIMB, they still think it's ADD, but they did adjust the 140. We'll talk about why they adjusted it, but first tell why Kenanga wasn't not that impressed.
Well, Kenanga said that today, despite the fact that MRCB making a net profit, but it's all due to the extraordinary items. So if you do look at the core earnings, it actually make net losses. And so with the weak property market, Kenanga today would be surprised if MRCB scales back the launches because, the sentiment is just quite bad for the property and they are not really that impressed, but they still give a market perform for this company.
That's because they think that their external construction border book of 2.5 billion, that's good enough. That's going to give them about 2 years of earnings visibility. They did lower, though, the 2016 expected earnings to account for the higher cost. Well, CIMB, on the other hand, They do expect it to raise some 600 million potential new funds from the placement. We mentioned that we would tell you why the price was adjusted. That was because they did have that placement. So after including the dilution, that's why the share price went down. I don't think it's a knock on the confidence. It's just technical.
Yeah, correct. And if you look at the reasons why, MRCB has a borrowing of about slightly more than 3 billion ringgit, but the cash flow is around 300 million
A borrowing?
ringgit. So
What?
the borrowing.
Oh, borrowing.
Borrowing.
I
There is
heard
about
borrowing.
3.87 billion ringgit, but the net cash is about some 300 to 400 million ringgit. So they really need this cash, and because of that, they also adjusted the price down. But the CIMB research also expects MRCB to back potential contracts such as MRT2, the viaduct contract, and also various building jobs. But if Nadia, MRCB has been appointed as a project delivery partner for the MRT projects back then.
Well, I think it's just a question of this company in the sense that how much are you willing to pay for it? Because 119 is okay, but there's still not much confidence in it.
Yeah, okay. Anyway, the week results today, the key takeaways from the CIMB is that the post-result briefing suggests that several tenders are up for awards in the coming months, and it could also benefit the MRCB. All right, so in summary, MRCB today announced their 4-quarter and FY 2015 earnings today, in which they recorded nice profits, although analysts are still skeptical due to extraordinary items. Despite that, analysts are also bullish on the stock, and it remains to be seen how the company will swim through property slowdown.
Yes, we all need to take a breath to make sure that we get that through.
Right, okay. Thanks for watching, guys. For more information, you can always look at the thehmarkets.com, where you can find the latest news on corporate developments. I'm Sulhi Azman, she's Nadia Hassan. Thanks for watching. Good night and good luck.